Thank you, Rose. Good afternoon and welcome to the Ethics Fundamentals series. My name is Patrick Shepard and I'm very pleased to be joined today by Deb Bordeaux, who is the head of our presidential nominations branch here at OGE, and Heather Jones, who is senior counsel for financial disclosure. So we're very grateful that you guys could join us, so welcome.
Thank you. Thank you.
And we have just a couple of administrative announcements and then we want to get right into today's presentation because we have a lot of interesting material to cover. We would like to remind everyone that we will be back here next Thursday at noon for the Advanced Practitioner Series, and we will be dealing with another advanced financial disclosure topic during that presentation. So this is another piece of our support for you during this public financial disclosure season and as we prepare for the presidential transition. So would it be helpful if we get into the deck and get started after we cover the procedures for asking questions? The folks who are on the Hangout, we do welcome your questions. We'll probably deal with them at the end of the presentation, but you can let us know that you have a question by typing it into the widget at the lower right-hand corner of your screen. Also, the folks on the phone, we will be opening the line up for questions at the close of today's presentation. So if you have any questions, please make a note of those and we will get to as many as possible in our time allotted. So let me pull up the slides for you guys and we can get started.
Great. Thank you, Patrick. So today, Heather and I will be going through the changes in the Public Financial Disclosure Guide. So we recently released a new web-based Public Financial Disclosure Guide that replaces the 2012 Nominee and New Entrant 278 Guide and the 2004 Public Financial Disclosure Reviewer's Reference. You can access the new guide by going to the Public Financial Disclosure section of OGE's webpage. It's structured in the same way as the Nominee and New Entrant Guide from 2012, with plain language instructions, sample illustrations, definitions, and answers to frequently asked questions, but it's updated for the OGE Form 278E. In addition, it has a number of new features that the 2012 guide did not have. In addition to covering nominee and new entrant reports, it also covers annual, termination, and periodic transaction reports. It also incorporates and enhances the programmatic guidance from the 2004 guide. The conflicts analysis part has not been issued yet, but we're working on that and we'll be issuing several legal advisories in the coming months on the conflicts analysis for the entries in the guide. In updating the guide, we took into consideration your feedback on prior guidance and have taken this opportunity to add guidance for additional entries and clarify and revise certain interpretations and suggest best practices. A big focus of the update was ensuring consistency between similar types of holdings. Now, we did include a disclaimer that although use of the sample language provided in the guide promotes a degree of consistency in reporting common items, we recognize that there may be other ways of reporting particular interests. So for nominee reports, we do want you to stick with the language in the guidance. However, we added this disclaimer to give you flexibility for reports that do not come to OGE. So Heather and I will now walk you through the various changes. You'll see the slides on the screen illustrating the new guidance, and we have a lot of material to go through, so we will be answering questions at the end. So I'm now going to turn it over to Heather to start us off.
Good afternoon. Our presentation is organized in the same order as parts of the financial disclosure report. So we'll start with part 1, positions. There are two pieces of new pieces of information in this year's financial disclosure guide. We have clarified that filers are not required to report unpaid positions with state or local government advisory committees unless the filer had a fiduciary duty or was otherwise treated like an employee of the state or local government. In addition, we have several new frequently asked questions about whether a particular position is reportable, including FACA committees, conservators, powers of attorney, custodians of uniform gifts to minor act accounts and uniform transfer to minor act accounts, positions with inactive LLCs, and section chairs of professional organizations like a section of the ABA or some other professional organization. We're now going to move into the assets and income part of the discussion, which is where a bulk of our changes or revisions have taken place. For the first time, OGE has provided guidance on small businesses outside of just small businesses that are law firms. We're asking that filers provide the name of the business and the line of the business, unless the name of the business includes the line of business. So if it's the Jones Car Wash, you don't need to indicate again that it is a car wash. We'd also like filers to indicate how the business is organized, whether it's an LLC, an S corporation, a sole proprietorship. That should also be included in the description field. And as you can see on the screen, the guidance follows other standard value income and income amount guidance. Following on business, small businesses often have assets and liabilities, whether it's their office furniture, their bank accounts, loans to get the business started. This is our new guidance about when those assets and liabilities that are associated with a business would need to be reported. For publicly traded corporations, the assets and liabilities of a business are never reported. For businesses that are organized as private businesses, you would report the asset and liability if it is unrelated to the business or trade. Granted, this is a call about whether something is related or not, but there are a number of factors outlined, and you would rarely need to itemize the business assets and liabilities. So if you owned a car wash and there was a side piece of property that is unrelated to the car wash, you may need to list it, but in most cases, probably not. Now I'll turn it over to Deb.
Okay, moving to carried interest. We now have an entry for reporting carried interest. This is the first time we've provided written guidance on this. A carried interest gives someone a right to future payments based on the performance of an investment fund or business. Carried interests are generally given to managers and advisors and consultants in private equity partnerships, real estate, venture capital, oil and gas, and small businesses. Now, as a matter of policy, OGE deems a carried interest to have a value that exceeds $1,000. Therefore, a carried interest must be reported. For the description, indicate that the asset is a carried interest and provide the name of the entity through which the filer has a carried interest. The EIF designation is NA. For value, if the value is ascertainable, it should be reported as a category. However, in most cases, the filer will not be able to ascertain the present value of a future stream of income. If that's the case, the filer should write value not readily ascertainable in the description box, and the type and category of amount of income should be reported. In addition, any arrangement to receive carried interest should be reported in Part 3. Okay. Equity interest in privately held businesses. So a filer with an equity interest or income from a non-publicly traded business is required to report the line of business, but no longer needs to report the city and state. However, the city and state is still required for farms and real estate. With respect to the line of business, it only needs to be reported once on the form for that particular entity. So if a filer already provided the line of business on another entry for the same entity, that is sufficient. Okay, so we now have an entry for reporting employee stock ownership plans. This is the first time we've provided written guidance on this, so this entry is new. For employee stock purchase plans, before we were requiring a filer to report the employee stock purchase plan as an asset even prior to contributing cash or purchasing stock. The new guide fixes this interpretation. A filer would now report an employee stock purchase plan only if there's a reportable cash balance or stock that meets the reporting threshold.
We have revised our guidance for severance. Previously, OGE required a formula for the severance payment to be listed in the description. A formula is no longer required as a part of the description for a severance payment. As you can see, you just need to include the name of the company and indicate that it is a severance payment. OGE has revised its guidance related to cash accounts, things like bank accounts, credit union accounts, and money market accounts at a financial institution. This does not apply to money market funds. that you sometimes find in a brokerage account. Filers are no longer required to report the name of a financial institution where a U.S. cash account is held. Cash accounts in the United States may not be aggregated unless they're at the same financial institution. So if a filer has two accounts, one at Bank A and one at Bank B, the filer will need to have two separate line entries, as you can see on the slide, listing bank account 1 and bank account 2. Please ensure you indicate the type of financial institution, whether it's a bank account, a brokerage money market account, and if the financial institution is a foreign account, if it's held in a foreign country, then you must list the name of the financial institution. So if you have a bank account in France or in Japan, you would need to include the name of the bank. Also, in addition to revising this guidance, OGE has indicated in the frequently asked questions that a filer is now not required to report a 0% interest account. So if the account pays no interest, it's not reported. But if it's a low interest account, like many accounts are these days, and you aren't actually receiving much interest, but it does purport to pay interest, those accounts are reportable. OGE has revised its guidance for farms and divided it into two parts. One for farms that are operated as a business of either the filer or the filer spouse. It's what they do as their position. And others that are an investment. So you just own land. So think about that, whether when you're looking at a filer's report, whether it's their business or whether the farm is just an investment, and decide which part it should go on. If it's put on part 2, the guidance is more similar to that of all small businesses. If it goes on part 6, it's more similar to that of real estate. Also, OGE revised its guidance, and you're no longer required to indicate the type of livestock or the type of crops. So you don't have to say cattle or corn, but you are required to indicate that it is livestock or crops, as you can see in the example.
Okay, so before I go to written options, I did want to just address one question quickly. Someone asked about definitions, not seeing definitions for the topics. The definitions are included throughout the guide, so there will be links throughout the guide. So for example, if you click on the word foreign exchange position, or the words foreign exchange position, it'll give you a definition. So they are included throughout the guide. Okay, so moving to written options. So when someone sells an option, this is known as writing an option. The guide adds a new entry for written options. Filers need to report written options as assets, valuing open positions or positions that still exist in terms of the value of the shares when the position was opened. Filers also need to report income attributable to written options. Foreign exchange positions, also called Forex, we added the requirement to specify whether a Forex position is open or closed. Open meaning that the position still exists, and closed meaning that the interest in the investment has terminated. So knowing whether the position is open or closed will be useful information for your conflicts analysis, because if it is open, the interest still exists, and you will have to continue to analyze the interest for potential conflicts. Now, for clarity, we recommend that filers also describe Forex transactions in terms of open or closed positions rather than purchases or sales. However, a filer may still use the purchase or sale terminology. For futures, we were consistent with the foreign exchange positions, and we added a requirement to specify whether a future position is open or closed. And for clarity, we recommend that filers also describe future transactions in terms of open or closed positions rather than purchases or sales. And again, a filer may still use the purchase or sale terminology if they wish. We've now simplified the reporting of short sales. Rather than reporting a short sale as a liability and an asset, a short sale, whether open or closed, will be reported as an asset only. So in addition, the guide specifies that the opening of a position is a reportable transaction.
OGE in this version of the guide has revised its guidance regarding investment funds fairly substantially, and it's outlined under the next several slides. So if you have an investment fund that is an EIF, which is the first example, you do not need to include the line of business for the fund unless it's not clear from the name that it is actually an investment fund. Other than that, you should report EIFs as you always have. With non-EIF funds, you now have a number of options. If you know the value and income of the underlying assets, we would encourage you to report as you see on the slide before you, with the name of the fund on the top line, the individual investments outlined with their individual value and their individual income. If you have a fund that's an EIF, but the value and income of the underlying assets is not readily ascertainable, the filer can indicate the value of the investment here, Jones Capital showing the value of the investment and the income earned from the investment itself, and just list the underlying holdings of the fund without providing the individual value and income from each individual investment in the fund. You could include a list of publicly traded stocks or bonds, or like here, privately traded companies. If it's privately traded companies, we'd ask that you include the line of business for that company. The new guide also includes a frequently asked question regarding how to report income for funds that have not provided income information by the date that the report is due, and a new frequently asked question regarding when PAS filers cannot disclose the underlying assets of a non-EIF fund, even though they know what the underlying assets are. Slide 18 addresses a fund manager who is coming to the government who has an agreement or arrangement to participate in a fund. The revised requirement is to report. You don't have to continue to report participation in the fund if the filer is just going to stay in it on Part 3. But if the fund is going to be buying back the interest of the filer as a part of their exit arrangement, that agreement should be reported here. There isn't guidance in the guide about how to do that, but if you look at moving out of a law firm, that guidance, the guidance you see on this sheet before you is modeled on that.
So for municipal bonds, filers are no longer required to specify whether a municipal bond is a general obligation or revenue bond. Specifying the issuer and noting that the asset is a bond is a sufficient description. For real estate, the guide clarifies that a filer may provide the county in lieu of city when listing the location of real estate. We also clarified that the term personal residence includes a home in which the filer permits a relative to live rent-free. Turning to trusts, the guide clarifies that the definition of vested beneficial interest is tied to OGE's regulatory definition. However, in practice, we look to controlling state law to determine whether a position is vested for purposes of financial disclosure. Filers should consult an attorney or the trustee for guidance as to whether an interest is vested under controlling state law. The guide revises the approach for reporting irrevocable trusts. With respect to irrevocable trusts, in addition to reporting underlying assets, as filers have always done, the filer should also report the top level of a trust in which he or she has a vested beneficial interest. Value and income should be reported for underlying assets of the trust when it is readily ascertainable. Now, we've provided 2 samples for reporting underlying assets when the value and income of underlying assets of a trust is not readily ascertainable. In such cases, the filer should report the names of the underlying assets and report the value and income at the top level of the trust. We have also provided a sample for reporting vested remainder interests in a trust, which allows the reporting of value and income at the top level with a note identifying the filer's fractional share or percentage share in the trust.
Okay, we're now moving to part 4 and the disclosure of confidential clients. So as you know, filers are required, new entrant filers and nominee filers are required to list their clients or people who've paid more than $5,000 for their personal services in the last 2 years and the current year up to date of filing. The guidance related to that has not changed, but there is new guidance if a filer can establish that they have a confidential requirement and a client that meets all of the requirements. The filers need to indicate the number of confidential clients that have not been disclosed. They need to indicate how many of those clients are entities, corporations, partnerships, LLCs, and how many are individuals. And they need to indicate the basis on which they are withholding the name of the client. So whether it's because they're subject to a grand jury investigation, whether it's they're confidential to a confidentiality agreement, that needs to be indicated on the form. Please remember when a filer asserts that there are confidential questions, that the first question you should ask yourself is whether there is a privileged relationship between the filer and the client. We've had people with PR clients who've tried to assert their clients are confidential. We don't consider that a privileged relationship. It needs to be a privileged relationship recognized by law. And also remember, we would anticipate that the number of confidential clients would be extremely rare, that it wouldn't be that many filers who are doing this. So if you're seeing this a lot, give us a call and we're happy to talk you through the process. We're now moving on to the transaction schedule. There are a number of changes related to transactions because we are finally addressing the T's in online guidance. So filers need not include their 278 T's in their annual reports, the information on the 278 T's, unless they're required to include that information by the agency, either by reference or actually reporting the transaction again. Filers are no longer required to indicate that the sale was made pursuant to a certificate of divestiture. And if a filer is making a report on the annual report for something that didn't need to be reported on the T's, or for something that was already reported on a T, they may use general dates like monthly or multiple or quarterly. However, if it is a stock transaction that was missed during the year or a bond transaction that was missed during the year and would have had to been reported on a T, they are required to provide the dates.
Okay, we have one item to mention with respect to liabilities. The new guide removes the requirement to report the city and state of a creditor. Okay, we're now going to turn to a few programmatic items, starting with extensions. There was some confusion in the past that an agency could only grant 2 extensions, so we clarified that agencies may grant any number of extensions totaling no more than 90 days, so long as the extensions are in writing whenever the due date is moved more than 45 days beyond the original due date. The guide also clarifies that extensions can only move the due date 90 days beyond the original due date. However, if the final due date falls on a weekend or holiday, the report is deemed to be due on the next workday. The guide removes the requirement stated in the 2004 guide that filers receiving combat zone extensions need to specify the dates of hospitalization or the date on which they left the combat zone.
Also, the guide for the first time provides rules about the retention of the 278 T's. Ethics officials are required to keep the 278 T's until 7 years after the receipt of the T, or until the related subsequent OGE 278E form is ready for destruction 6 years, or which is 6 years after its filing. We've also changed the review timeframes. In the indicating that now all reports must be certified within 60 days of filing unless further action is needed, not just intermediate certification. The final must be done within 60 days, and we're encouraging all ethics officials to take steps to wrap that up as quickly as possible. The review assumptions have been updated in that we are encouraging people to use their professional judgment. They're no longer required to do a line-by-line reconciliation to the previous year's report. And just note that a general comparison to last year's report is okay unless it leads the reviewer to believe that the filer didn't understand the reporting requirements. If a reviewer believes that, they should go back and possibly do the year-to-year comparison. Also, if you're going to make an annotation on a form, you need to inform the filer of that. Also, on the release of reports, the guide clarifies that an agency is not required to release its annual reports until 30 days after May 15th, even if the report was filed with the agency more than 30 days ago. So if a report is filed in March, an annual report, you still aren't required to release it until 30 days after May 15th. And that concludes all of the updates in the 270 AD guide. Thank you.
Excellent. Well, thank you both very much for joining us and sharing the new guidance. I think this is going to be very, very helpful. We did have one question come in on the Hangout as we were going through the presentation. Maybe we would like to take a few minutes to address that. So the question is, why did OGE remove the requirement to name the bank? And how does that interplay with the the responsibility to uncover possible conflicts of interest?
OGE ethics officials are always allowed, if they need the information to make a conflicts determination, to require the information about the bank. So if you're at the OCC or the Federal Reserve and you're a bank regulator and you wouldn't let someone review a bank where you have a bank account, you are more than encouraged to ask for that information from your filers.
I think that's really important to remember because, the financial disclosure processes in general are a balance between the information that we need to do our jobs and, having a reasonable level of reporting. And any entry could require us as ethics officials to collect more information from a filer to ensure that we can rule out the possibility of conflict. And I don't see there's no reason that this should be any different, and we should be well equipped as reviewers to manage that. Rosa, could we open it up on the phones for any questions we might have?
Oh, and as far as the changes, I think if you print out the slide deck, that will be a good summary for you of all the changes that we've made.
I know I'm...
If you'd like to ask a question over the phone, please press star 1 on your touch-tone phone. I will announce you when we're ready for your question. Again, you may press star 1 on your touch-tone phone.
Great, thanks, Rose. And yeah, we do have an official who commented that, for the purposes of their conflicts review of their agency, the names of the banks are important. And that's good. And of course, you should continue to do your due diligence and receive the answers to all the questions that you might need. So thank you for your comment. Do we have any questions on the phone, Rose?
We do have one. One moment while I get their name. Our first question is from Michelle Wacko. Your line is open.
Welcome, Michelle. Hi, Michelle.
This is Michelle Wacko with the Securities and Exchange Commission.
Hi, how are you?
Good. How are you doing?
Doing well, thanks.
I have a question about the transaction section. Well, I have a couple questions about it. I guess my first question is, I know that the guide still says that dividend reinvestments or capital gain reinvestments that occur in a filer's, say, for example, mutual fund, need to be reported if the amount of the capital gains reinvestment is above $1,000. So I was wondering why, I guess, like what's the benefit, or what does OGE feel the benefit of that disclosure is? I'm not sure what, like the mutual fund will be listed as an asset. So why, I I guess every single one of our filers, or many of them, have these one-time dividend reinvestments, which are completely passive, and so we're having them report it, but I'm wondering why.
Well, if the dividend reinvestment results in a purchase of over $1,000, then that's a reportable transaction. So, I mean, we can't get away from the fact that you have a purchase of over $1,000.
Even though the filer didn't initiate it, I guess the purpose of the 278 is to for us to identify conflicts and for the public so that they can see conflicts. I'm just wondering what this adds.
Yeah, I mean, of course, the financial disclosure report is used to be able to evaluate for conflicts. However, the financial disclosure requirements are separate statutory requirements from the conflicts of interest analysis. And there are certain things that are required by statute with respect to reporting so if you have a purchase over $1,000, it's required to be reported.
Okay, and then my second question has to do with a lot of the filers here, they own stock, and then during the course of the year, there will be a merger that they're not aware of. So for the transaction section, when two companies merge into each other and one of them ceases to exist, does that constitute a sale and then a purchase if one company, their stock just goes away?
So we are going to be issuing guidance in the near future with respect to exchanges, and I think I'm going to hold off on that because that's currently being evaluated, and you should be seeing guidance soon with respect to exchanges, and it will cover things like mergers.
Okay.
Excellent. Thanks, Michelle. I think we have a procedural question here that is I think just a practical matter, which is, where we have the value of underlying holdings within certain funds or our accounts not being readily ascertainable. What steps do you take to determine if a regulatory exemption is available, for example, the de minimis?
Okay. So with respect to determining, conducting a conflicts of interest analysis with respect to underlying assets, so if the amounts are not readily ascertainable, I think what you're going to kind of want to, I guess you can't assume that the underlying asset is covered by an exemption. So I think you're not going to be able to say that it is covered by an exemption if you can't ascertain that value.
Yeah, in the past, I've attacked these from the other direction, which is, once we have the names of the underlying holdings, we could determine which of any of those might require regulatory exemption. And if we think there's a potential conflict there, we could inquire about the specifics of that to determine whether or not an exemption is appropriate. But then we don't need to do that process for assets that don't pose potential conflicts. So you can kind of do it from the other side by looking at the duties of the employee, determining what, if any, of those holdings might pose conflicts of interest and where they might, digging in further if possible. And if you can't determine that an exemption applies, I think you should assume that it's not. Excellent. Do we have any other questions on the phone, Rose?
Yes, we do have a question from Jeff Shear. Your line is open.
Welcome, Jeff.
Hi. Just a couple things. First, we've missed the beginning of the briefing, so if this was addressed at the beginning, sorry for asking it again. We were having computer problems, and only way we were able to get linked in was through the phone. But just wondering if there is a PDF or a printable link to print off this new guide, or the only way to access it is online.
Okay, so that's a very good question. First of all, the guide was designed to be interactive, so you could click on the frequently asked questions, and then you could click on definitions. However, we are currently working on a PDF version that will be a printable version. Now, you will lose the benefit of kind of the interactive features of the guide, but I do understand that sometimes ethics officials may want something in print that they can bring with them to a meeting. Again, it's best to use it in the web-based form, but we're currently working on developing a PDF version that will be printable.
Can I add one more thing to Deb's? Is that it is also a living document, so it does get changed on occasion. New guidance may be added. So once you have the printable document, you still should go back and check to see if something's changed before you take the guidance to a filer.
Right. I think, yeah, we're sort of past the point in our history.
Question is, online, is there a specific link that summarizes the changes that were made from the 4th edition to the current guide?
So if I were you, I would print out. Can they print out the slide deck?
Yeah, the deck is available on the Max page, so you can pull that down and take a look at it.
Okay, so I'd print out the slide deck because that will show the new guidance.
So we've covered all of the instances of significant change.
Correct.
Yeah. Excellent. Excellent.
I'm sorry, print out
The slides from today's presentation. So.
Oh, okay. So those are the summarized changes.
Yeah, those are they.
Captured everything that was the changes.
Excellent.
If there wasn't, online, if there wasn't more to what was briefed today.
Okay, great. Well, thanks very much.
Okay, that's all my questions. I appreciate it. Thank you.
Sure, thank you.
If you'd like to ask a question over the phone, you may press *1.
Well, thank you guys very much for joining us today, and I hope as we prepare for the increase in nominee financial disclosure, we're going to continue to support the community in the area of financial disclosure reviewer training. So I hope that you found this week's presentations to be very helpful, and we look forward to providing you more guidance as we're going forward. And if you have suggestions for things that we could do in the future that would be helpful to you as you prepare for the presidential transition or the coming filing season, please let us know in the course of evaluation, because we do use your evaluations to determine what to offer next. And if there are things that would be helpful to you, we'd really appreciate you letting us know so that we can act on those preferences. Do we have any other questions, Rose? Excellent. So thank you everyone for joining us. We hope you found this to be helpful. And again, please do share with us your feedback and your suggestions so that we can continue to support you in your financial disclosure reviews. Until next time, I'm Patrick Shepard.
Thank you.